So here, go to the March 2020 data, right? These are all employees, directors, etc. of this company, and look at the value of the stocks these people have sold in big numbers. Hi everyone, welcome to today's video. So on today's video, I am going to speak about 3 stocks. Out of these 3 stocks, I have purchased 1 stock today as I'm shooting the video on 3rd of August. One is a maybe stock and one is a no stock. Before starting the video, let me tell you very categorically, this is not an investment advice. I'm not pushing you to invest in certain types of stock, not invest in certain type of stocks. I'm simply, honestly trying to tell you whatever I'm doing in the market. Second key point, I act as per my portfolio like all the investors do. For example, in my portfolio, there are a series of risky assets. There are a series of safe assets. There are a series of moderate risks assets. So you need to understand what your portfolio looks like. If you do not know how to build a portfolio, I have done several videos on that. You can go and study that. So with these disclaimers out of the way, let me jump directly into the video. And the first stock that I'm going to speak about is Maruti Suzuki. Okay, so very interesting stock because first and foremost, I will show you the pricing history of Maruti. And what you will notice is that right now, the stock is trading at approximately 9,000 and it was trading at the same price somewhere around like late 2017. So it has been almost 5 years. The returns, if you would have just invested, let's say 100 rupees here, your amount of money in this stock would have been close to 100 rupees only. So one could argue that there has been no major price movement in a stock like Maruti Suzuki. Now, before you jump in and start saying stuff like that, you know what, Maruti is a dead stock because Tata Motors is going to take all the market share away. So let me quickly jump onto Tata Motors stock also and let me talk about its pricing history also. So again, same analysis, again, that same period, almost 2017-ish. It danced around, it has come back here again and it has not even recovered to its previous prices. So it's not as if that Tata Motors is a much significantly better stock compared to Maruti or Maruti is a much worse stock compared to Tata Motors. Nothing of that sort is happening. Please do not believe in these narratives. At least I am not believing in these narratives. So now comes the natural question that, okay, why is it that a stock like Maruti or Tata Motors have hardly moved in the last 4-5 years? Okay, so this is a chart that you can see and you can take a look at the overall sales volume of vehicles. So this includes 2-wheelers, 3-wheelers, etc. And you can categorically see that over the last 3 years, 2020, 2021 and even in 2022, the sales volume has been on the lower end. So this is a very important point for us to understand. Now the second key point is that both for Tata Motors and Maruti, the operating profit margin has been going down. For example, I will show you the profit and loss statement of Maruti Suzuki and what you will notice is this part, that from 2020 onwards, the operating profit margins have been low. Why these have been low? Because the steel prices have gone up, a lot of input cost has gone up, a lot of R&D money is being spent on EVs. Even Maruti is trying to get into that space. When will it get it? Will it be successful? Not successful? All that is up for debate. But to cut the long story short, 2 key problems have happened with these automobile stocks. Number 1, the margin contraction has happened. Second, the sales volume is not high. So practically speaking, it's a both supply and demand side issue that the companies are grappling with. This is an industry-wide issue. This is not a Maruti specific issue. This is what gives me a little bit of confidence in this stock that the company is not doing anything off. It is just that the market dynamics and industry dynamics are such that a company like Maruti is suffering. So now you might say that, okay, Akshat, that is probably your opinion. Can you show some data around Maruti, how its performance has been? So let us study some of the key details about Maruti stock. So first and foremost, let us take a look at the market share of Maruti. So here you can categorically see that when it comes to compact passenger vehicle segments, its share has almost stagnating. It's not as if that it is increasing or decreasing. When it comes to compact sedan, again, it's not as if that there is something fundamentally off that is happening. When it comes to mid-sized passenger vehicles, their market share is going down. And I will explain that in a few minutes as to why that is happening. And finally, we have commercial vehicles where the market share has been up and down for the last several years. So it's not as if that there is something fundamentally off that is going here because some of the segments are generating more revenues. Some of the segments, they are increasing their market share. Some of the segments have stagnated in terms of market share. And also we need to see this in context of the fact that Maruti has immense market share, almost 60% here, 54% here. So these are big market shares. And of course, a big company is going to bleed some of its market share whenever the competition increases. Now, out of all these segments, the most important segment for Maruti is the compact vehicle segment. And you can see this from this particular chart that in terms of volume, Maruti actually ends up selling almost 50% units from the compact segment itself. So this is a fairly important market segment for Maruti, and this is the major moat of the company. Why am I saying this is the major moat of the company? Because I can speak from my own personal experience. I am looking to replace my i20 with a new car, and most likely I am going to buy a basic Maruti car this time. Why? Because I'm in Goa right now. And one of the key things that I'm worried about while migrating to a new city, so to say, is the service that I will get for my car. Whether it is easy for my car to get serviced, and Maruti has one of the biggest networks when it comes to that. In fact, even my experience of looking at cars at Maruti was very pleasant compared to Hyundai and Honda. And almost 60-70% of the cars that I've seen in Goa are Maruti car. And this is the feedback that I'm getting. Maybe I'm slightly biased here, or my understanding might be incorrect. But the theoretical facts that I'm reading, it gets reconciled when I'm looking around and seeing so many Maruti cars being rolled out. Let me also quickly take you to the sales number, and you can categorically see that except for 2020-2021, in fact, this 2022 data looks promising as of now. These are the last trailing 12-month numbers. But the problem with Maruti's stock right now is that the profits are not rising. Why? Because the OPM or operating profit margin problem was there. Why? Because of the high input cost. Now, this becomes a problem if the company is not able to pass along the cost to its customers. This is the same concept that I talked about when we were talking about HUL, and now HUL has given massive run up. And here again, we need to ask a central question, that does Maruti have the capability of passing on the cost to its consumers? So here there are two important points. First and foremost point is that do customers have an alternate? For example, can they buy a Tata company car at a cheaper rate compared to Maruti? So the answer seems like a no. Yes, the answer can become a yes from Tata if it is able to launch an EV and that can find a great product market fit. But as of now, it is not happening. Then comes the second point, that whatever price increases have happened in the back end, when will they be passed on to the customers? So my assumption is that when the BS6 norms are going to get implemented more aggressively, Maruti stock will start giving a breakout. Now, why am I saying it? Let me show you another key picture here. So you can see that first mover advantage is with Maruti when it comes to migrating to BS6 norms. Whatever cars people are going to buy now, they most likely should be buying around that BS6 norms, and Maruti is going to benefit from that. So to cut the long story short, it's not as if that Maruti is the only one that is suffering in the automotive space. Even Tata is suffering, Eicher Motor is suffering, all the automobiles companies are suffering, and here is a very powerful graph as to why. So you can categorically see that the entire market for vehicles, it is highly cyclical. It goes something like this, right? And this is still 2019 data. So now it is happening that we might go like this. So we are likely to see an uptrend when it comes to automotive stocks. Now, is it just my belief, or I can show you some data? So, okay, here is the data for you. So this data comes from Society of Indian Automobile, which talks about how the number of sales of different vehicles have gone up very recently. So this trend is likely to continue. The supply chains are going to get rationalized over time, and it is very, very likely that a stock like Maruti is going to give an uprun. Now, before I move on to the next stock, let me talk about final 3 points. So the first point is that Maruti has a lot of internal manufacturing based in India. So almost 95% of the manufacturing of Maruti happens within India itself, which is a great advantage for a company like Maruti. Why? Because in India, manufacturing cost associated with cars is very, 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 very high. And that is one of the reasons why, that given the fact that Maruti is a very efficient producer of car, it is able to survive in the Indian market and capture a lot of market share. Second key point, right now the company has close to 0% debt. So let me show this to you here, that you can see that the debt to equity is almost 1%. So the debt is negligible. Why is this important? Because if the debt is negligible, then the next round of growth that will happen in the automotive space, that will require a lot of R&D spent, that will require a lot of expenses in terms of migrating, building new models. For that, the company can procure new debt in order to create facilities fast. Tata Motors has already done it. So to say, they have made their EV move. I am personally not very happy about it, simply because of the fact that the EV story is not cooked as of now, as per my understanding. Of course, I can be wrong, and I am happy that Maruti has not made that EV card play yet. They are waiting for the markets to mature a little bit, and I'm hopeful that once the markets are mature, they will come in, they will be able to produce car efficiently even in the EV sector, and will be able to retain their leadership status. So did I invest in Maruti right now? You will figure out the answer if you continue to watch the video. The second stock that I would like to speak about is Tanla Platforms. This is a very discussed stock. So many of you have asked me to make a video around it. So here it is. Here are my thoughts on Tanla Platforms. So first and foremost, let us quickly understand what Tanla Platforms actually does. So they do something called a CPaaS or CAS, which means communication as a service. Now, what is communication as a service? You might have seen that when you visit websites, there are chatbots. Now, what are those chatbots? Those chatbots allow the customers who is visiting the website to engage with the service providers who are running that website. And in the middle, we have these chatbots that are managed by a team of developers. What are they providing? They are providing communication as a service. There is another term in tech called as software as a service. A classic case in point would be Razorpay. So Razorpay is a software as a service. So what Razorpay allows you to do is that, for example, if you go on Wisdom Hatch, which is a website that I run, and you decide to purchase my stock market course, then we have a Razorpay integration. You will simply input your details and buy the course. It's a very safe platform. So to you as a customer, they provide you safety, and to us as entrepreneurs or business users, they allow us an integration that simplifies our life because we don't have to manually tally everything, all that stuff. So that is a software as a service, and Tanla Platforms, what it does is that it provides communication as a service. Now tell me in the comment box, do you think that WhatsApp is SaaS or CaaS? So let me know in the comment box. I would love to read your response and also justify why you are saying that. So Tanla Platforms is basically a CaaS, so to say. They control approximately 70% of the market share in India. And to delve more deeper into their products, these are the type of services that they are providing. For example, they are providing messaging services. They are providing voice services. They are providing IoT and bunch of different things. You can go on their website and figure out what specific type of CaaS they are providing. You can also pause the video here. I will be putting a quick snippet here which outlines what each of their products actually does, just to develop a better understanding about Tanla Platforms. Now, people hardly are interested in tech. They are more interested in speculation. And that is one of the reasons why Tanla Platform these days is being spoken so aggressively about. Why? Here is the price chart for you. And this is very, very interesting. If you go and take a look at the last 10-year history, what you will see is it used to trade at like 65, 70 rupees back in March, right? During the COVID time. Then it went up all the way to approximately 2000 rupees. And now it is crushed to almost 700 rupees. So it has lost almost 70% of its value from the top. Now, is this like a great time to buy this stock? Is that a great time to exit the stock? Should you be aggregating the stock? What should you be doing? And what am I doing? Let us have a systematic discussion. So there are 4 or 5 key points that I will draw your attention to. So first and foremost point is about the profit and revenue growth, and you can categorically see that the revenue growth has been very impressive, and also the net profit growth has been very impressive. So this makes for a case that we should sell everything, even our house, and put all our money into Tanla Platforms. Should we be doing it? The answer is no. So this brings me to deals and trade. So here, go to the March 2020 data, right? These are all employees, directors, etc. of this company, and look at the value of the stocks these people have sold in big numbers. The second key point about the company that you should know is that they have over dependence on one type of tech products, so to say. Now, this company seems to be stuck somewhere in the middle, because if you think about it and look at the product suite that the company has, it has a series of A to P type of products, but they are not an end-to-end shop for anything. For example, when it comes to Shopify, even that stock has been crushed, but Shopify is an end-to-end ecosystem. If I want to start my own digital store as a small player, I can go to Shopify and get everything done. There is a very clear end-to-end product like that. So this is on the extreme right hand side. On the flip side, you have something like Razorpay, which is a software as a service, highly niche product, solving a very specific issue for a business. But Tanla Platforms is sitting somewhere in the middle. This is just one part of the equation. Now, here is the most worrying part about the company, that right now they are spending only 1.6% of their revenue in terms of R&D research. For any tech company, that is really bad, especially if a company is trying to escalate its growth. It simply means that they are just in the market with the set of its series of products. They have no foresight as of now, and they are not looking to innovate for the next layer of growth. So where will the growth come from? Because the products that they have, the rate at which the tech changes, it will get outdated very, very quickly. Now, then I also did some more digging, and here is point number 3, which is at what point did the company did a buyback of its share? So this buyback happened back in April 16th, 2020. And the offer was successful with a subscription levels of 87%, and they offered a 55% premium on April 16th, 2020, right? So let me show you what happened on April 16th, 2020. So around this time, the stock was trading at roughly 55-56 rupees. They bought it at a 55-60% premium. Even if you assume a buyback of 90-95 rupees, company bought that. And after that, this entire escalation of the stock price has happened. So who is the beneficiary here? I will leave that to your imagination. So I'm not trying to cast what is going to happen next, but there is a lot of looming regulatory concerns also. For example, so here is a statement that was asked during their con call. It was said, in the media articles, we have read about this NASSCOM making a case to RBI to change the regulation to include an app notification instead of SMS. So what is happening is that you might have seen that sometimes you get in-app notifications and that only gets activated when you turn on notifications for your app. But in SMS notifications, you will by default be getting those SMS notifications. So now if this changes from SMS based notifications to in-app notifications, which is a very high likelihood, Tanla Platforms is going to lose a lot of business. And my hypothesis is that that is going to happen. So I do not see a massive moat for the business as of now. It is highly prone to regulation. They are not investing much money in R&D. At least that is the information that I was able to aggregate. And the stock still looks overvalued. Now, this is not a recommendation from my side that you should be buying, not buying. I will leave it to your imagination, whatever you want to get out of this conversation. Then comes the third and final stock, which I have actually purchased. And the stock is Havells. Here is the snippet of me purchasing this stock. So I purchased a quantity of 630. I was already an investor in this stock, so I purchased more at an average price of 1276.8. And at the time of taking this screenshot, it was at 1279. So the total comes out to be around 8.5 lakhs of investment that I have done. So let me now systematically explain it to you why I have purchased Havells. And again, please, this is not a recommendation to buy. I'm simply sharing my research, whatever I have done. I can be wrong also. Now I don't need people on my head that, hey, you know what, Akshat, we bought this stock today. It is not giving an upfront from tomorrow. I cannot take guarantee of that. So please do your own research. Please consider these inputs as a data point from my side. So let me start talking about Havells from the point of view of which industry it is in. It is in the consumer durables industry. I had made a separate video on V-Guard. Again, please go and watch that video. It was also in consumer durables. And what is happening in the consumer durables industry is that the last 2-3 years have been horrific. Why? Because similar to automobiles, consumer durables, things like fridge, AC, TV, all this stuff is considered luxury products, and the luxury products have been beaten down. Why? Two things. Sales have not been high. People do not have discretionary income. And second, the supply chain disruption that has happened has escalated the prices of raw material. So as a result, almost all consumer durables companies have been crushed. At least their stock prices have been laggards for the last several months and even for a couple of years. So let me show you the historic breakup of the product growth of Havells, what type of products they are making and what is the growth history of these products like. So you can categorically see that majority of their business depends on cables and wires. And the growth rate here has been fairly good. Then comes this Lloyd Consumer. This is AC business, so to say. This has grown slightly. Their switchgear business has been almost stagnant, not growing at all, so to say. Even the lighting and fixtures business is not growing, so to say. So they are largely contingent on cables and wires and electrical consumer durables. So these are the business lines through which Havells make a lot of money. They are used in home fittings. If the real estate market is bouncing, then a company like Havells will come back up. That is the simple hypothesis here. And that is one of the reasons why I am believing in the Havells story as of now, simply because the real estate market is a very good proxy for a company like Havells. Now, why am I stressing so much on cables and wire business? Very simply because this is the highest ROCE business for this company, and it has been doing that for years now. That the most contribution to capital for Havells comes from its cables and wires business. If the houses are getting built, if the real estate market is jumping back up, which it is happening right now, then a company like Havells has a very strong chance of bouncing back from this point. And the real estate market is coming back. Now, what people end up assuming is that they look at this chart and then they get scared that, you know what, the AC business of Havells is not doing well. Okay, AC business is not doing well, but the company does not depend on its AC business. It is trying to grow its AC business from this point. But right now, its bread and butter is not the AC business. Now, another argument against Havells is that it is not expanding on its fixed asset capacity. For example, you can see that over the last 2-3 years, it has hardly expanded on its fixed capacity. Now, if the company is not putting out new factories and doing a lot of positive stuff or using its capital effectively, then how will it grow? So that fixed assets need to grow, but for a company like Havells, that is not happening. Is that a sign to worry? The answer again is no, that you should not be worried about it because this is a market cycle game. Remember the graph that I showed you for the automobile sector, that hey, it's highly cyclical. Same goes for consumer durables. There is a very strong correlation between automobile sector and consumer durables. So from that particular perspective, it is expected that going forward, they are going to undertake more fixed capacity expansion Do they have the money to do it, or are they in debt? Let us quickly analyze that also. So right now you can see that the cash equivalent of the company is around 2,500 crores. So they have the capital to do it. Let us quickly check that how much is the debt. So the debt is less than 10%. So they can take even more debt in case they feel like expanding their capacity. So from that particular perspective, when the industry bounces back, there is no reason why a company like Havells should not be bouncing back. Again, not a recommendation for you to buy. Now let me talk about technicals, because wonderful technicals are getting formed on Havells, and this is called as cup with handle pattern. This is the cup, this is the handle, and it gives a very clear breakout target of roughly 1450. Even ICICI Security has talked about the fact that Havells can go up to 1644. I honestly do not believe in much of that type of commentary, but I'm still presenting other people's viewpoint also. So net, I'm a buyer in this because technicals are getting formed, the industry is bouncing back, and even the fundamentals of the stock is solid, but again, not a recommendation from my side for you to buy. Will I be buying Maruti subsequently? Maybe, maybe not. I'm not 100% sure, but I will keep a track of that stock also, and I will keep all of you updated. Please like this video and share it with your friends, and I will see you soon.